the Eventbrite link to linking?
Whatever make it works.
I think this should help.
Sounds good, please.
Sure.
Hi everyone, we're gonna get started in 2 minutes. Welcome to the event. And my name is Vivian. I'm the founder of NYC Data Science Academy. We have two David Kim and David W here today to present their project they made in the bootcamp. So in the agenda for today's event is we're gonna have Manisa to give you a little bit of background about the school for a little bit. Then David King gonna talk about the spank, while David gonna talk about what he find out about the job description in data science field. Sound good? Okay, I'm gonna switch to Melissa.
Hello, everybody. My name is Manisa Felsen. I'm one of the admissions officers here in the school, and I'm very happy for today's event. It's very exciting. Many of the students I was the first point of contact, so also make me very proud. So if you're here, you're curious, you're probably thinking like you're interested in data science, you're interested in study. So let me tell a little bit more about us. I'm going to share my screen. Just give me 1 second. So let's go in presentation mode, view. You're probably seeing my full screen, hopefully. So we are NYC Data Science Academy, and we offer data science bootcamp, and we actually have upcoming sessions. I'm going to talk a little bit more about that. But before we start, I want to give some details about our school. So we are very proud of being a bootcamp that teaches not only one, but two programming languages, Python and R. As I mentioned earlier, we offer our data science bootcamp. We offer as a remote live option with live classes, and part-time online and full-time online with pre-recorded lessons. If you are interested in learning more, feel free to reach out to me during this event, or we can schedule a call and then I can learn a little bit more about you. Also, another thing that we are very proud, and I think today in this event we will actually have a little feeling about it, it's our hands-on learning experience. All our students work in a total of 4 projects. And today we're going to see some of this project presentation, so you have a little taste. We are very proud to support our students 100% during job placement. All students that graduate from our program, we have our career service team that really actually helps you transition from the program to a job in the data science industry. We've had help to over 2,000 alumni students throughout the history of the school. And well, not to say that we have been rated as the best data science bootcamp and best online data science bootcamp by Switch Up. So as I mentioned, the upcoming sessions, we have the remote live bootcamp with the starting date for May 3rd. And we have our part-time online and full-time online, the ones I mentioned earlier with pre-recorded lessons and one-on-one mentorship. We have an upcoming session of April 6th, and then another session May 17th. So if you are interested in learning a little bit more, I'm happy to learn about you, your specific case, your goals for career transition. Feel free to email admissions. The email on the screen I will put on the chat as well, admissions@nycdatascienceacademy.com, and then we can talk a little bit more. Hope you guys have a wonderful event today. Thank you, Vivian.
I'm having Vietnamese tonight. You down? Oh my God. Wow. Kung Pao. No, they have a Vietnamese restaurant right next to the Domino's. I mean the pizza. Whatever.
Hey, Vivian, I think you're on mute.
Yeah, David, please go ahead. It's your turn.
Oh, sure. Okay. Thank you, Vivian. Thank you, Monissa. Just a little bit about myself. My name is David. I am currently a student in the New York City Data Science program. I come from a background of hospitality and retail, doing like operations development, project management, and data was integral to my job. But last year I was finally inspired to pursue a career in it. So that's when I decided to join the Data Science Academy here. And after the bootcamp, what I want to do is find a role where I'm able to help make business decisions and provide insights, similar to what I'll be doing for you guys today. I'll be presenting you the shiny dashboard that I created to showcase SPACs as investment opportunities. And I'm not a financial advisor, but I mean, really, I think the type of insight that I found, I feel like I could be charging for. So let's get started. I'm going to just share my screen here. 1 second. Are you able to see my screen?
Yes.
Yes.
Awesome. Thank you. Okay. So let's get started. Let's talk some money. So you hear me say SPAC. What is a SPAC? It is an acronym for Special Purpose Acquisition Company, as you can see here in my title. They're essentially, I'm going to give you the high level of what SPACs are. They're essentially empty companies that are created to merge with a target company to help that company go public. So instead of that company having to go a traditional IPO route, a SPAC company will merge with them. And it's actually been around since about the 90s, but it only really began soaring last year. So how does a SPAC work? So in this example I'll give, I'm going to be the SPAC manager. So I am, let's say, a reputable financial entrepreneur. And so I'm going to start a SPAC company and get it publicly listed, which is pretty easy because it's just a blank company. I file it, I get approved, and the ticker symbol is DK. I'm going to start selling shares at about $10 a share, 40 million shares. And you guys in the audience love and trust my vision. So without knowing what company I'm going to merge with, you guys invest. And that's the formation and the IPO phase you'll see here on the left. Afterwards, as a SPAC manager, what I'll do is I'll go into a target search. So I announce you guys, hey, I'm gonna go find a company in the hospitality industry. Some of you love it and buy more. Some of you hate the idea and sell out. That's fine. We're trading as the pre-merger company right now. After that, I'll announce a few months later into the negotiation phase. So I'll say, hey, I negotiated with In-N-Out. We're going to get 30% of the company in exchange for that $400 million that we raised. And some of you love it and buy the hype, so you guys buy more. And then again, some of you don't like it, so you sell out. The next step is, once the agreement is finalized, I will create a shareholder vote meeting for everyone there. And if it doesn't get approved, I have to go back in and find another target company and go through the steps all over again. But if you do like it, and you do like the In-N-Out negotiation in this example, we would close the SPAC merger, where what happens is the 400 million that we amassed goes right into In-N-Out. And as shareholders, you guys were shareholders of DK, the company, but now it's after the merger date that we agree on, it begins trading under INNO or whatever ticker symbol that In-N-Out decides. If you can see the top and the bottom, the timeline is very important here as well. So on average, SPACs have about a 2-year, 24-month timeline for them to find the target, go through and merge with their target company successfully. And if not, the wind-up SPAC return investment to shareholders here, what this means is you guys will be able to get your money back. Typically, it's the listing price of $10 a share. So if it was going up and you bought it at 15, doesn't mean you'll get all 15 back, but that $10 safety net is going to play a big part in the SPACs here as well. So a couple of things. What are the pros and cons of this? The pros is that you get to get in early. So IPOs typically don't favor retail investors. If you look at some from last year, Airbnb listed at $68, but you weren't able to actually buy it till $144. Snowflake, another big data company, was at $80, but it wasn't available to the public until about $120. So you can think of SPACs as the great equalizer. It really gives you the chance that's typically reserved just for private or institutional investors, and you get to get in at the ground floor. The only con is that you invested in this blind. It was your full trust in me to make the negotiation and find the right target. But also, you do have this other side where you were able to vote to reject it if you didn't like the negotiation. Oh, sorry. It's okay. You can hear me, right? I think I'm unmuted again. Okay, awesome. So back to where I was, the expiration date, you can negotiate between about 2 years. If it gets to be about the 2-year mark, and if I am unsuccessful, you guys have 2 options. You guys would be able to vote to get your money back, as I said, with the safety net, or vote to extend to give me more time. But again, I think the main part of this to absorb, if this is a lot, just high level, you can think of that $10 safety net if the SPAC fails as the big takeaway from this. So when you look at the type of companies that will go through on through SPACs, you might think, okay, it's a little sketchy, empty shell companies, they don't sound good. What are the type of companies that can't just go through the IPO process? Well, you see that all the companies that you see here are recognizable, popular companies that actually all went through the public route through SPACs. And it's beneficial for the companies because, as you saw in the example, In-N-Out got $400 million straight up from us. They don't have to go through like a tedious and long IPO process, all just to chance to go public. And then once they're listed, maybe no one wants to invest in them anyway. So this way, for the company that's targeted, it's a guarantee for them to get the money. It's shorter and it's faster. So now that we know the type of companies that went public through SPACs, I'm going to move over to the Shiny app dashboard that I created. So I created this using 71 SPAC company data that I found through SPACtrack.net that were merged between the beginning of last year until early this year. And I was able to get their daily stock prices through Yahoo Finance. So as we saw the logos of the companies before, my first thought was, what type of companies are going through this backdoor IPO SPAC route? And what I thought was, okay, maybe it was like small companies, unknown companies that really didn't have the resources to go through the traditional IPO, but I was wrong. You can see when the company enterprise valuations appear, the smallest one was at $400 million. Multiplan was the biggest company that decided to go through the SPAC route, and they were valued at $11 billion. On average, you can see that it was about $2.6 billion, the average enterprise valuation of the company. On the left here, you can see how big SPACs were in 2020. So when you're tracking the trading volume back from mid-2017 all the way through early this year, how in 2020 you had such a big spike in the daily trading volume around these SPACs that I researched. On the right here is a word cloud that I created. So these are the target companies that the SPAC managers wanted to address. So you can see that tech, fintech, consumer healthcare were some of the bigger industries that they were targeting companies to help them go public. Another one here is merger timelines that I was showcasing. So that 2-year timeline on average does hold up. You can see on average 602 days. So it's about a year and a half that it takes for a SPAC company to IPO to go all the way through a merger. But you can see some of them, CERE merged as fast as 6 months, but ATNF was a company on research. I found out that they listed in 2017. So they must have had a couple of extensions to give them about 3 years plus to find a target company and actually take them public. The next tab here is my favorite because you get to track the daily stock price of a particular SPAC company. So you can see that the pre and post here are going to be highlighted in 2 different colors. And the merger date is so big. I want to emphasize again, because after the merger date, you are investing in a real company versus the empty SPAC company with the $10 safety net. You can see drastic changes in price. And this is where I'm going to start to give you guys some of the tips on how to play the SPAC, in my opinion. So you can see Nikola here. This company made a lot of money for me last year, thankfully. But you can see the amount of time that it was stagnant, but it never dipped under the $10 safety net. So investors were confident that they would get the merger done. And I think around in May 2020, this little bump here, it may look small relative to the overall price action. But if you think about it, this was a jump from $10 to $15. That was already a 50% move up. And you can see here, as the target company was acquired, the rumor came, you can see it spike up to around $80. So that was an 8x on this stock if you were an investor in Nikola. Unfortunately, there was some fraud that came out. Their hydrogen trucks were not what they advertised it as. So you can see the price action correct. But even through this downfall, you can see even at the $20 out, you're still doubled your money for buying into this Nikola company. Another one here is QuantumScape, which is a Bill Gates-backed battery EV play. You can see that, again, before the merger, it never dips under that $10 safety net. After the merger, it was one of the highest, it was the highest actually in the group, with a price all-time highs at about $130. Now you may see, oh, wow, all these companies go up. I wanna just tell you guys that's not the case. So I'm gonna show you an example, HOSV, which is a company that was building a Hall of Fame village for the NFL. I don't know how you guys feel about football, but you can see here, it wasn't well received, and there wasn't really much volume. There wasn't really much price action or the hype going up, which is why you really see it stay around the $10 mark. But again, even for this unpopular stock, it never dipped under the $10 play. However, after the mergers and that guarantee of, if you don't like the merger, to get your money back at that $10 price, once that safety net was removed, you can see that the price plummeted down to about $2 to $3. So again, this is just to highlight that pre-merger, it could take months, if not years in some cases, for the merger to actually go through. And the price may be stagnant, as you can see here, for quite some time. But even with just the small spikes before pre-merger, you can make 10%, 20%, 30%, some of them 4x, as you can see before. So you can see the comfort in investing into a SPAC before merger. However, after, you can see spikes both to the upside and the downside after the merger is successful. So after taking all these individual stocks, what I did was I created a SPAC index where I was purchasing just one of every stock on my list. And what I saw was that I had a return about 46% in this hypothetical index between the time frame of mid-June to February of this year. You can maybe attribute that to the V-shaped recovery that we found last year, and last year was a time like no other in the stock market. But this is just to show that SPACs are still talked about. They really made their impact last year, and people are taking this more and more seriously. On the right here, you can see some of the highlighted individual tickers. QuantumScape, as I mentioned before, had all-time highs at 131. And on average, the stocks do tend to stay around the $10 range. So there is maybe on average, you can say limited upside, but also limited risk as well. But after the merger, you can see the Hall of Fame Village, as I highlighted earlier, you could have lost 90% as well, but that was only after the merger. On the graph here, this insight is for time in the SPAC stock. So what I did was I took an average of all the prices pre-merger as well as post-merger. And the bottom here is not the date, but the number of days that it is relative to the IPO for the pre-merger and the post-merger for the post-merger stocks. So what I saw here was that, yes, on average, they still maintain, even though it's not a guarantee, a price movement above the $10 range. But because of the uncertainty of the post-merger, I'm going to focus on the pre-merger here. The biggest thing to note here is that right before the 200-day mark, you can see a sharp decline back down to $10. What I think that speaks to is investor sentiment. So maybe I can generalize saying that if a SPAC company takes about over 200 days, investors are switching to different stocks or something, or they're selling out because they're not as trusting of the SPAC manager to find the company and merge it in the short amount of time. So after I created the index, what I did was I put it to the test against some of the more popular indices in the market. So you can see that in red is the SPAC index that I created versus the NASDAQ, the S&P 500, and the Dow Jones. I created this, I had to normalize it. So I am tracking the movement relative to each indice's own min and max for the set period of time. And you can see that although the SPACs did trail the other three major indices, you can see it caught up when SPACs, I think, really were at the forefront of a lot of investors' mind because of this limited risk in December, January, February. They're still talked about today every day on CNBC. So as more people bought into it, I think that the price action is comparable to some of the major market indices that we use to track. So when you do look at the SPACs in general, as well as individual SPACs, what I can say is when you're comparing to the S&P 500, for example, as a benchmark, an average yearly return on that is about 10%, which if you buy a stock at $10, a SPAC stock, even if it just goes to $11, you're already keeping up with the S&P 500. And I mean, like, funds and like people are always trying to beat the S&P 500 as a benchmark. And with limited down risk, I would say that that is something that we should definitely consider to invest in stocks pre-merger. So in conclusion, I think this is I'm not a financial advisor. This isn't my financial advice, but this is what I would do. If you guys want to follow, please do. I would first research its status. As you can see, the timeline can vary on how long it takes for the SPAC to successfully merge. But on average, it took about 1.5 years. So I would look to buy stocks that are about the year mark in, and then hoping that in the next 6 months, I can ride the hype up leading up to the merger. But after that, I don't want to leave myself exposed to the risk, to the downside after merger. What I would do is I would sell out of most, if not all, of the shares pre-merger, so that I don't have to risk that volatility and I can de-risk against it. So I had some great success last year using this to beat the S&P 500 and the NASDAQ as benchmarks. So I hope this helps and shed some light to the massive potential in the SPAC industry. And if you want me to manage your money, I'll be happy to start a hedge fund with commission, of course. And I'll do more things. I'll find great SPACs, consider the SPAC management, keep my ear low to Wall Street bets, because that's a big thing now. And yeah, all in all, so I'm happy to share the link here with you guys if you guys want to check the app that I created. And if you want to discuss SPACs, Teslas, or any other stocks like that, I'm happy to connect. But with that, I am very thankful for your time, and I want to hand it back to Vivian or open it up to any questions.
Yes, we have time for questions. Feel free to speak up.
Yeah, hey, David. I enjoyed the presentation. Super interesting. Obviously, this is a hot button and topic and issue. These SPACs are increasing in popularity. One thing, if you ever wanted to do more with this, I think one thing that'd be interesting to look at are correlations, right? You're looking at you're comparing the returns between various index and SPACs. And I think one thing that could add to the analysis is correlation with broader markets. Because if you were able to show some, lack of correlation, I'm sure it wouldn't be perfect. That's the kind of thing that, like, in a mean variance framework or some type of optimization might justify its existence, within a broader portfolio.
Okay, thanks for the feedback.
I have a question. What is driving the price action on the SPACs? Is it the industries are focused on? Is it, or are you just taking a look at the price movement pre and post? But is there anything in particular that would move you to a certain SPAC?
Post-merger, I don't know if I could. I think the price movement varies based on the actual target company that you're investing in. However, the pre, it's a lot of hype in my opinion. So it's a lot of rumors, and that's the type of stuff that I think drives the action. So for example, I think I was focusing on this quite intensely last year when I had more, when I was more attentive to the SPAC market. But even just this little blip, this is when the SPAC company had announced that they're going to merge with Nikola, the hydrogen truck company. People love that green play. And just on that, it had jumped from 10 to about $15. And then it lost some hype because it's kind of like everything's based on the news, right? Because it's not an actual company yet. So maybe they release more, maybe an investor deck for the future potential investors or something like that. This one had quite a crazier ride than I think some of the other ones. But yeah, I would say pre-merger, people are looking at the type of deal that the manager was able to negotiate and just the market sentiment on how it feels. Like hydrogen was big, it was sexy last year, going green, versus I would say like the Hall of Fame Village that tanked massively as a contrast. People weren't as excited about that. May not have been fundamentals, may have also been just the investor sentiment.
And you're the pre-SPACs, like, does that mean are they trading already on the market? It's just pre-SPAC? Mm-hmm. Okay, so these are already trading on the market. Okay.
Absolutely. I think right after boot camp, what I'm going to do is when I have more time, get back into researching more SPACs. And I learned Selenium through the boot camp, so I'm able to scrape the websites and automatically get new SPACs that are listed and keep the daily stock prices more up to date.
Awesome. Are there more questions regarding this topic?
Hi, yes, I have a question. Can you hear me?
Yes,
Mm-hmm.
Go ahead.
Hi, so what was the different tools or technologies or languages you used? Is this done in Python, this whole thing?
No, this one was done through R.
R, okay.
Mm-hmm.
Okay, great. Looks great. Thank you so much.
Yeah, no worries. And on the website here, if you go down to the researcher here, I have my GitHub link to it as well. So you're more than welcome to look at the code.
Okay, thank you so much.
Of course. I'll actually put that into the chat if anyone's interested.
David, do you want to pass them the blog post link so you get a chance to explain how to solve the problem?
Sure, absolutely. I'll be more than happy to do that.
Yeah, awesome. Okay, if with no further delay, we're gonna switch to David W, please. Next topic will be what he found from the job description around data scientist role. Thank you so much, David, again.
Thank you both. Yes, thank you, Vivian, and it's a great presentation, David. Hi, my name is David Wasserman. After many years of being at a major credit rating agency where I led the development of many applications and models and led data governance teams, I decided to take some time to enhance my existing skills in business data and technology with data science. And as such, in the market, looking for a role with a mid-sized, large, small firm, it doesn't really matter too much, where we can explore some synergies with what I can do for them and what they can do for me. Let me share my screen and share, and from the beginning. You can see my screen okay?
Yep,
Perfect.
David.
Yes.
Excellent. So the project that I worked on was called Analyzing Job Requirements for Data Scientist Positions. For many of us in the Data Science Bootcamp at NYC Data Science Academy, The end goal will be to acquire a position as a data scientist. To do so, many of us will scan the job boards like Indeed and LinkedIn and Glassdoor. And I thought there was really no better use of my skills to automate my search and glean insights from as many posts as I possibly could. And I did so through web scraping. In addition, on the hiring side, the insights that I found could be used to generate better job descriptions. So if you take note to the right, you'll notice that from the job descriptions, I was able to create this word cloud. And you can look into it and see what pops up into your mind. It's it's one of those tests, personality tests, I guess. As for the agenda, I'm going to talk about how I went about doing this project. I'll talk about the statistics for the different search locations that I used, the job requirements from the different job postings, what the salary information is, and companies that are looking for data scientists today, as well as the best days to look for a position. Here's how I went about doing the project. I used web scraping through Scrapy. So that's Python code that I developed that would crawl through different web pages and extract information from the HTML or the information on each page. And this is what's known as web scraping. In order to scrape at a faster speed, I would use what's called a rotating anonymous proxy. This would have the effect of hiding my IP address. So they wouldn't know that I'm coming from my apartment. It basically looked like I was coming from a whole bunch of different places. It would let me speed things up, and because it doesn't look like just one person's making the request, they're less likely to trip what are called CAPTCHAs or automated Turing tests that would prevent automated browsers from scraping and doing the work that I was doing. In early February, I did this work and I scraped the job descriptions and other metadata like the company, the metrics, locations, whether it was a remote position or not, the job title, the date that was posted, and the original URL. Indeed has a link that goes to their website and then redirects you to the original URL poster. So I was able to follow that link around and get the ultimate URL. The postings that I found ranged from under 300 characters to over 19,000 characters in a single post. So it does make one wonder if there should be a penalty for being too brief or too verbose in some of these job descriptions. And once I got these job descriptions, I was able to use natural language processing, or NLP, to parse the 2,500 job postings and analyze the job requirements as far as education, skills, and technologies. So I just want to take a moment to talk about the source of the data, which is Indeed.com. Indeed is a popular website. It's used by job seekers and job posters to connect with each other. Of all the job boards, Indeed has the most lenient of the terms and conditions. Unlike LinkedIn and Glassdoor, if you want to search the job postings, you don't have to require a username and password. And what I would do is I searched for data scientists across 6 locations, sorted by not relevance, but by date. So it would pick up the most recent job postings across the different search locations that I put in. Just one more point is that Indeed also offers an API, which is an automated data interface that is useful, but a little bit limited when it came to volume. So in all, it just made it a very good candidate for scraping. When I looked at the cities that I wanted to analyze, I chose 6 cities at first that would be, as you can see on the left-hand side, throughout the entire United States, geographically diverse, and also big hubs for computer scientists and data scientists in specific. In future, I would love to expand this to, other cities like Atlanta or Seattle or Washington, DC. These are other ones on my list. But for the purpose of this exercise, I just focused on these 6. Some statistics for the numbers. So jobs were noted with a location, or they had a tag that said they were remote or temporarily remote. If they were in the blue side, it shows that these were on-site positions. If they were in the green, it shows that these were tagged as remote or temporarily remote. The most common cities, the cities with the most locations were San Francisco and New York City. However, if you look at the ratio of on-site to remote, it seems that New York has the edge. And I would posit this is mostly because of the high cost of living in San Francisco, as well as the nature of industry that happens in New York City. New York is more finance oriented, whereas San Francisco has a number of more technology firms, and they seem to be more accustomed to the remote experience. One thing also we can note is that roughly 50% of the jobs existed were posted in the last 30 days, and more than 50% are actually sitting out there for longer than 30 days. So now we'll talk about some job requirements. This was using the natural language processing, as I was speaking about earlier, and to comb the job descriptions and taking the minimum job education the minimum education for each job. So for instance, it looks like most jobs require at least a bachelor's degree, followed by a master's, and then about 20% do not have any requirement whether for job education. After that, there is some jobs, roughly 10% ask for a doctorate, and about 1 or 2 do ask for postdoctoral work. This was an interesting bit. So I checked the job descriptions against 103 different skill keywords, and what shows up number 1 by far is machine learning. This is the buzzword. After that, we have other skills that are asked for, like domain knowledge or data science, computer science. These are the 3 things that sort of intersect with each other when you think about data science. You want to have the computer science, the domain knowledge, and the mathematics. And all of these do show up on the list, as well as some other skills down on the side. Onto technologies. So what I did was I bounced the job descriptions against 158 different tool keywords. I literally went through a list of keywords and added to the list as I saw some common words that I should have put in the beginning. The number 1 tool technology that people are using is Python, then SQL, then R. By no coincidence, at the boot camp, we are studying these 3 technologies. After that, you'll notice that there's big data, such as Spark and Hadoop, cloud, Azure, AWS, Google Cloud, and just cloud in general. And then even old stalwarts like Excel make the list. Roughly 10% of the jobs don't have anything specified. Now, I question any job posting that doesn't say what these skills, the technologies that are using are, especially in a technical field like data science. So I found this to be a very interesting metric. And going through them, I couldn't see any reason why they didn't specify anything common. They might have said something that was esoteric, but in general, they really should have, they should specify something like Python or the packages in R or something like that. Anyway, salary information is always an interesting topic. Of the 2,500 job postings, only 97 job postings had salary information. And this information came in hourly, monthly, and annual formats. So I had to normalize the figures to come up with the annual figure. One thing to note is that pre-hire salary figures are normally negotiable. So you must take these numbers into, with a grain of salt, that whatever there is here is sort of like a base offering, and then it's up to the candidate to negotiate from the low end to the high end. Now, one thing the Bureau of Labor Statistics says is that a college graduate with at least a bachelor's degree, which you'll remember from our previous slide shows the minimum education for a data scientist, they earn a median salary of $72,000. Over here, the median salary ranges from $114,700 to $140,000. So it does show that the median average for data scientists is much higher than the average salary, showing that it's a very lucrative profession to go into. On these box plots, you'll notice that there are these 4 outliers. These jobs are the maximum numbers. This one goes up to $450,000, for instance, and then these other 3 jobs are also very highly paying jobs. 3 of them were based in San Francisco, and 1 of them was based in New York. The jobs were also, it was interesting to note that 3 of 4 of them were remote, and then 1 was on-site. As for companies that are hiring, I built this chart to show that most companies are asking for just 1 to 2 data scientists. And then a good number are asking for somewhere between 3 and 10, and then the rest are asking for more than 11. So there were about 1,130 unique companies asking for data scientists. And this number was about 730 of them are asking for just 1 data scientist. And 321 of them over here are coming from companies posting 20 or more. So you have your variance of what kind of company you want to go to. Do you want to go to be the only data scientist, or do you want to be among your brethren? You'll also notice that the companies posting the most data scientist positions are in a very interesting realm of industries. So you'll see companies like Deloitte and Bloomberg and Wells Fargo in the consulting/finance fields, Facebook, Twitter, Uber to a certain extent, Spotify, they're more in the technology field. And the others also fall into that finance/consulting areas. So the last thing I want to touch on is the best days to look for a position. So the charts that I'm showing here show the days posted when I did my scraping. So these are when the posts came out, and the chart to the right shows which day the posts came. And you can see this downward slope that as posts get older, they tend to get filled and they get taken off the market. On the right, we can see that Tuesday and Wednesday are the most popular days for posting jobs for data scientists. And from my research, I found that technology jobs are usually applied for in the first day of the posting. So what I would suggest is that since Tuesday and Wednesday have the best days of postings, those are the days that you really should be looking for a position. Likewise, if you're posting, it makes sense to just go with the flow and post on those Tuesday, Wednesday days. So that comes to the conclusion of my talk. You can reach me at my email account. My GitHub is up here, and my blogs are as well on here as well. If there's any questions, I'm happy to take them.
Yeah, feel free to ask questions.
Hey, it's Joe here. Hey, David, thank you very much for your presentation. I think it was very insightful. Can you hear me?
Yes, I can.
Yeah, it was very insightful, and I think it's also very practical for everyone at the boot camp. What I noticed in the keywords is, after Python, SQL, and R, the 3 big ones, there have been a lot of references to big data. For example, Apache Spark, Cloud, AWS. I guess Hadoop is still there, but it's dropping off in terms of popularity because, Spark is kind of replacing it. So I guess, does that, from your interpretation, does that mean that I guess big data is the next important skill then, after obviously the 3 languages?
Well, SQL is up there as well, and SQL is plays a very important role, even if you're using Snowflake. So I would say data is a big thing, whether it's big data or small data. But I would agree with you that big data is a key part of analysis. And from what it looks like, Spark is really being requested by a lot of different companies. There are some other things on the horizon, Dask, for instance, if you're going in the big data space, that haven't made the list yet. But I definitely agree with you that big data is on the rise.
Cool, thank you.
We can take more questions. Feel free to speak up.
Hello, David.
Yes, Terrence.
Hey, so quick question. On the education, you have bachelor's degrees, but were those in data science or other
Let me go to
disciplines?
That slide. Mostly from what I looked at, they were computer science, data science, not data science in particular, but I did not, I got that information mostly from culling the job requirements. I did not go into what the majors were in. It's, in general, I think a lot of times with job requirements, they do tend to say bachelor's in a certain thing with a certain or commensurate experience.
Okay, thank you.
Hello, David. This is Manjeet. Regarding the data scientist, did you just search for data scientist as the keyword, or did you also include the variations like data engineer, big data engineer, or what is that? The machine learning engineer?
So in Indeed, I had used two parameters. I used the keyword of data scientist, and then I used the location of the 6 cities that I was talking about. Because I didn't search on relevance, I didn't sort on relevance, I sorted on date. I would receive a whole bunch of different job postings that weren't just necessarily only data scientists. There were data analyst roles, there were some business analyst roles, but anything that came up according to Indeed's algorithm, according to that date and with that certain relevance, it would have to have something to do with data scientist. But
okay,
it was not
got it. Got it. No, I got it. So using the API, so whatever the API is returning, like on the interface itself, is going to return the same results.
Yeah, the API would return the same results. I use the website, so but they should return the same information.
Okay, got it. Thank you.
Cool. More questions? We probably have time to take one more question regarding the bootcamp and the projects, please. David, one student asked the question is, which tool you used in this project? It's from Lucy.
Sure. So I use Scrapey to get the information off the websites. I used a proxy, an anonymous proxy server, I think freeproxy.net or something along those lines. I used NLTK as the natural language toolkit. And I think it was WordBlob for the word cloud, and then Plotly for the plots.
Perfect. Okay, great. So thank you so much for both David's presentation. And after the event, we're gonna send the video recording, the slides deck to all of you, so you can follow through and try to learn from their work. We have our admission officer, Manisa, here. If you have any question regarding the bootcamp program, feel free to contact her. Manisa, would you mind speak up a little bit?
Sure, yeah. Feel free to send your questions here on the chat or just on your mic. I'm also available for a call. I'm gonna share my schedule with everybody, just like a link. And if you wanna book some time with me, we can discuss, like your career goals And just a reminder too, like I said, we do have some upcoming sessions. We have our part-time online bootcamp starting April 6th. And we also have a full-time, which those are pre-recorded lessons. Again, I'm super happy to talk to any of you who are interested and break down the details of the programs. And we do have our live sessions that will start May 3rd. These are the upcoming sessions. If you are planning to a later start, like in the summer or even in the fall, I highly recommend you start like planning. And if you want to speak with me, I'm happy to, we can discuss like a study plan for you, or just like a plan on when will be the best time for you to join the program. Let me I'm gonna share a link here. Cool. This is my direct link, and you can actually book a call with me anytime. Even today I have some availability, or next week.
Okay, great. Guys, I also want to share a few updates on the big data course offering. We are gonna roll out a few programs towards graduated alumni to test the program. So the two topics we're gonna teach is how to deploy your machine learning application into the cloud in 15 minutes. The second topic we want to cover is Kubernetes. So alumni, stay tuned, you'll get new content to your email box on those two topics. If you have new learning, like if anyone know Sharp package, SHAP, I'm recruiting. I want to make new content for all the new cutting edge topics. So if you learn new stuff in your jobs, let me know. We want to give a lot of back to the graduate community and see whether it's something we can open up for more people. So do you like the topic? Anything else you want to learn, let me know.
Thank you very much.
Yeah, on the Kubernetes event, the Kubernetes and the Amazon deploy machine learning application will be recorded with our alumni. We're also gonna offer the blog post. Based on the response, we will decide whether we're gonna do a live session to support the learning. Sound good? Awesome, thank you everyone for coming in to this event. Next Come and Learn with alumni event gonna feature one of our bootcamp alumni. His name is Martin, and he's currently a senior VP at Salesforce. So you can go to our Academy page to register for that account, that event. And we also have manager from Apple gonna present two of his projects made in Shiny very soon. So please follow our Academy page. We have a lot of job posting announcement. We have a lot of new events and new learning material announced there. And good to see you, Jonathan. It's been a while.
Yeah, no, listen, it's been a long time since I plugged into one of these, but I'm glad I did. These were super interesting presentations. And I'd be excited to join for the Kubernetes and things like that too. So.
Yeah, it's good to see a few familiar face. I feel alumni. Awesome. Wish everyone have a great afternoon. Thank you so much for coming in, and thank you for both David to make this happen for us. Excellent job. Can we do applause for the speakers? If you can unmute. Yeah. Thank you so much, guys. Good job.
Thank you.
Okay.
Thank you.
Thanks,
okay, bye, guys.